Hi there. Welcome everyone. Thanks for joining. I'll just wait a few seconds for a few more people to turn up as we're just on the hour, and then we'll start this session. All right, I think we might start now. Again, welcome everyone. Thanks for attending. Today's session is all about stakeholder reporting. So it's one aspect of ESG and one aspect of ESG reporting that many of you are dealing with at the moment. For those who don't know me, my name's Andrew Henderson. I'm one of the consultants at Speeki. We're a consultancy and we have software to support really non-financial accounting methods. So things around all the things that aren't financial, which includes ESG, includes sustainability, includes many of the other topics that some of you are aware of and familiar with. But today's session is really focusing on stakeholder reporting. We'll go through a few questions around stakeholder reporting. First of all, who are your stakeholders? Some of this might be obvious if you've been through your materiality assessments and other things, but we'll go through that as the first point. Secondly is trying to think through, what do your stakeholders want from you? So if you're going to report out to them, what are the things that they want to hear about? And then really, how do you do the reporting? So how do you get out to the information that stakeholders want to them? And we'll wrap that up. We should be a bit under half an hour, so we've got some time at the end for some questions. So please put some questions into the chat, either as we're going along or at the end when we have a bit of time. Okay, so before we even start that, let's step back a little bit and think about what are some of the drivers of ESG initiatives within corporates. Now, the one that we're probably most going to be focusing on is the non-financial reporting legislation. So that's, in the Europe context at least, that's the CSRD, the Sustainability Reporting Directive, and its ESRS companion, which is the standard to report against. And similar non-financial reporting in other legislations around the world. On top of that, you've got the more specific climate-related reporting, things like TCFD, CPD, etc. So that's driving a lot of the initiatives for corporates. It's not ESG in total, but it's certainly the environmental piece where we're focusing just on climate impact and carbon emissions counting, etc. The third is the material financial reporting. So your standard annual reports and financials already has a requirement in most parts of the world to report out on material sustainability issues. So if there's a sustainability issue that is going to have a material impact on your business, then that goes into the standard reporting that you've been doing for 100 years or so. So no real change there, other than some of the things that maybe weren't considered as material because they were not direct financial. Some of their more indirect financial materiality is now being covered in the material reporting. On top of that, though, you've also got lots of other specific topic legislation. And again, not talking climate here, but things like Modern Day Slavery Act in the UK, some of the child labour legislation across Europe, and many other topics which fall generally within the ESG framework, but have been in place long before ESG was coined as a term, and they're very specific on the topics that they need. So again, it's driving people, or it has been driving people, to build what could now be considered ESG initiatives, but have always just been initiatives that people have been doing. Things like anti-corruption has been around for 30 or 40 years, since the FCPA. It was never considered an ESG topic because it didn't exist at the time. But corruption is one of the topics that needs to be reported out in the ESG or sustainability reporting, certainly under the ESRS. So it's one of those topics that's been around, but it's not an ESG topic. There's certainly a bit of legislation around taxonomy, again, in the European context, making sure that activities that you do, if you're going to consider them or market them as environmentally friendly or sustainable initiatives, they have to meet certain criteria. So again, the initiative's not so much about the reporting in that case, it's about making sure that you've got the backup for your statements about sustainability in products. The next area, which I think is probably the biggest area for most of our clients at the moment, is business partners. So everyone's in a supply chain or a value chain at some point, and these obligations are flowing downstream, as do most obligations. So business partners are constantly asking for information about ESG initiatives, which is driving people, even if they're not covered by the CSRD or some of the other legislation, it's driving people to think about what they do and how they can answer the questions that are being asked of them. And lastly, industry mandates. So everyone's in some kind of an industry. Every industry has one or more industry bodies. A lot of those have codes of conduct and have certain mandates that they require, either mandatory or voluntary requirements as a body. So the extractive industry, the shipping industry, etc., all have standards that they require their members to meet or would like them to meet. And again, there's reporting out on those to those industry bodies. So that's really the high level view of why people are doing any of this before we dive into a discussion of stakeholders. So the first question with stakeholders is, who are they? And I've gone a bit for the dictionary definition of stakeholders, certainly pulled it out of the ESRS, because it's quite important to think broadly about who your stakeholders are. Obviously, IFRS and some of the other standards in GRI have slightly different versions, or quite different versions of who stakeholders are. But for today's session, I want to sort of have a very broad discussion of stakeholders, because it's up to really every company to decide who their stakeholders are. Again, from the ESRS, there's two groups that it talks about, with a lot of overlap between those two groups. The first is affected stakeholders, and that's really everyone that's affected by the impact of a company. It could be upstream, could be downstream, it could be within the company. So it really does cover a wide range of people and organizations. It could be internal, it could be the employees. Obviously, they're going to be very much impacted by social aspects of ESG. On the environmental side, it's the vendors, the suppliers. It could be totally indirect. It could be, if you're a factory, an agricultural producer, the farmers will obviously be one of your affected communities, but also their families and their communities can equally be affected communities. And on the sales side, obviously your channel partners, etc., your customers, obviously, but then end users of your customers. So your customers might sort of use your product, create some other product, and then that is that is a further end user is potentially impacted by your product. So that affected stakeholders is an enormous range of people and companies that you need to consider. The second group is probably the more familiar group of stakeholders, at least in the financial world. It's the users of sustainability statements, which reflects the users of financial statements in the financial reporting world. So it's anyone who really would use a statement of a company to make decisions about that company. That may well be the same people as making financial decisions. It could be investors, and that's really the one that most people think about, but also lenders and creditors. And this is growing enormously in the banking financial services market, where people can potentially get different interest rates, different deals, according to their ability to show ESG or sustainability credentials. And it could be wider than that. It could be basically anyone who's going to be reading the content of an annual report or an annual financial statement. And it could be the analysts, it could be governments, it could be academics. So there's a wide range, even in the topic, in the definition, to say who would be reading a sustainability statement. So those are your stakeholders. And it's important for that to think about that, because it is a lot wider than what I suppose traditionally people think of as stakeholders, which is really in the hierarchy above them in some ways. So management of your business and investors, so the people who are putting the money into the companies. Those are obviously your key stakeholders still, and they're still important. But the definition of what a stakeholder is in the sustainability world is far, far broader than certainly in the financial world. The financial statements really are only focusing on that second tier, the users of the statements. But the sustainability world, and certainly the ESRS definition, is far, far broader. But while you're doing your stakeholder sort of assessment of who are your stakeholders, one area that you can't forget are what at least the ESRS deems silent stakeholders. And that's really nature, the world around us. It's the world that doesn't have a voice, is someone or is a thing that you should think of as a stakeholder, especially in the environmental topics. Obviously, waste management, pollution, carbon, definitely. Those are all topics which do affect the world, the environment, even though the environment doesn't have a voice. Now, there are ways to obviously get around that. There are plenty of NGOs and activists who will take up that voice or make up for the lack of voice. So there are ways to engage with a silent stakeholder, but it's definitely something that can't be forgotten when you're doing your analysis of who your stakeholders are, and then get to what it is that they want. And also, whilst you're going through those two big groups, you can't forget your internal stakeholders, because they're not actually in that set of groups. So your management is a stakeholder. It's probably something that you would be thinking about first rather than last, but it's important when you're diving into the weeds of a stakeholder assessment or a stakeholder analysis to not forget your internal stakeholders, because they're certainly the most direct stakeholder that you've got. They have to approve budgets and pay the bills. So it's important that they're involved in your assessment, and you ask them what they want out of any engagement that you have. So once you've thought through who your stakeholders are, the next thing is to try and assess what it is they want to know. Now, obviously, a lot of this will come directly from your stakeholders, and it should come from your stakeholders. But what I've tried to do is sort of think through the types of areas that your stakeholders are going to want to know. And then you can start mapping those things to the specific stakeholders once you've actually had that discussion. So the first thing is what's important to your business. So I think your stakeholders may have an idea of what they think is important. Certainly, they'll be thinking about the things that affect them most directly, are the most important to them. But one of the things they do want to know is what's material to your business. So the output of a materiality assessment is very important for stakeholders. to make sure it maps with what they either told you was important to them or what they think is important to them. Another area that we find important to talk about is the value that the work that you're doing will bring to your business. It's not necessarily something that all your stakeholders will be focusing on. It's more your internal stakeholders that will be focusing on it. But it is an area that's important to assess as to whether your stakeholders are interested in it. I think stakeholders are generally wanting to know a bit about your program, as in who's in charge of the program, so roles and responsibility. These are often things that are on your website or on annual reports. And that sort of falls within the governance of sustainability, which is again something that will be important for people that are responding on the ESRS or IFRS reports. There's also a bit about strategy for each of those topics that you've decided is material. So a statement about what you're planning to do. You might say something's material, but it doesn't necessarily mean that you have anything that you're going to do this year or next year, because you still have some kind of prioritization in place. So it's important to say what it is that you're doing on a particular topic, and what are the outcomes. So what are your objectives? And that might be over different time periods, this year, 5 years, 10 years. An idea of the more detail. What are your policies, procedures? How are you actually getting training people on those topics? Is again something that I think a lot of stakeholders are interested in, because they'll see the output of that. And then the metrics. So obviously metrics is very topical for a lot of people who are doing their CSRD reporting right now, or any of the other standards, because the metrics are quite onerous and there's a lot of them. But that's also something that stakeholders will want, but not necessarily all the metrics. It's really the ones that most affect them and show them progress about the things that they find important. And then progress against what you've proposed to do and what you've agreed to do. And I think that the thing here is what you propose to do is in general statements, but what you've agreed to do is in contracts, because certainly your direct suppliers, your direct customers, and your employees, you have contractual relationships with. So everyone in the second party world, you have contractual relationships with. And in those contracts, you may well have agreed to do certain things. So stakeholders in some senses really just say, show me that you've done what you contracted to do. And the last thing, again, is whether you did add any value to the business. So some assessment of whether the programs and the actions that you've undertaken, not only do they meet the metric or deliver metrics that you want, but did they add value to your business? So that's another area that some of your stakeholders will be interested in. Again, more internal than external, but those are really the things that we see what your stakeholders are wanting to know, but only on the topics that are really of concern to them. And that's where you can slice down sort of the topics. In terms of how you engage with your stakeholders, so how do you find out what they want to know, which is obviously the step before you can report out to them? Well, there's no specific way of doing that. None of the reporting standards have any particular way of engaging with stakeholders. They all say it's important and you have to do it, but they don't say how you do it. But the information that's coming from your stakeholders, in the first place, it is important, and you need to make sure that you document it in a fairly clear and structured way, for two real reasons. One is that the engagement process with stakeholders generally will need to be reported out. So you need to say what your process is, which generally means you need a fairly clear and consistent process. But the second thing is auditability. Now, Speeki as a business is an audit business. If I'm doing audits of these topics, that was one of the areas that I definitely will be looking at is how did you decide who to speak to, and did you follow the rules that you said you were going to follow, and can you show me the information that you gathered in that way? So really, the methods that you go through to engage with your stakeholders could be anything, as long as they can be described and it's auditable. In terms of how you do it, lots of different methods. Could be in person. Obviously, that's the best way of doing it, having an in-person discussion, either in a room or on a phone. But if you've got lots of stakeholders, there's plenty of them to talk through, so it can be quite onerous. But very much for your key stakeholders, your key investors, your key suppliers, in person is definitely the best way of gathering the information you need. That could also be in groups. So if you have groups of stakeholders in the same place or in the same venue, maybe at an investor meeting or a supplier meeting, again, that's another way of gathering that information with a bit more speed. Probably the most common way that we see is questionnaires, sending out questionnaires to your nominated stakeholders. That's great, but it's very difficult when you start going beyond your direct stakeholders, mainly because you just don't have the information. You don't necessarily have email addresses. So that gets quite difficult. So there's there's ways that you need to think about. How do you get questionnaires out to the more indirect and certainly further down the supply chain where you're getting less and less information about them? And that's where maybe you don't actually get direct contact with those and you go through NGOs or some other parties to get that information. And lastly, contracts, as I said before. A contract, and more contracts are actually setting out the things that people expect on the non-technical compliance of a contract. So it's not just you need to give us this many widgets at this price on this date. It's more you need to show us your policies. You need to show us the various things around sustainability programs. So more and more that's getting pushed into contracts. And to some extent, even if you don't speak to someone, if a contract actually sets out the things that a customer or a supplier requires, that's your engagement. You know what they're asking for. When you're doing your engagement, I know we're slightly off topic, you need to know which stakeholders to engage with. It doesn't mean it's every stakeholder, because if you're thinking about the affected communities, it's an enormous number of people, especially for larger companies. So you need to do some sampling. You need to do some prioritization. You need to look at how many stakeholders are representative of a particular group. So you're not looking at too many, but you're also not missing key information. And then thinking about how do you actually access your indirect suppliers and end users and anyone outside of your direct contractual relationship, which is difficult. It's probably the hardest bit. People are all challenged that with their Scope 3 emissions, but it's a requirement, and so people need to think about the ways that they can do that. And then lastly, the silent stakeholders. So again, dealing with nature, obviously it's not something you can ask, but it is something that you need to think through. Who is it with NGOs or activists or government bodies or anyone who can actually tell you what that kind of a stakeholder is wanting. So that's the how to engage. And then how to report, which is obviously the aim of this session. How to report is a number of ways to report. Now, I suppose the simple answer is the general reports, ESRS, the ISSB or the IFRS, are general reports that you can publish. The benefit of those general reports is that anyone can pick them up. Anyone with a passing understanding of the requirements of those reports can read them and understand, and it's comparable with everyone else in the same community. So the simple answer is you can just publish directly those general reports, and then all of your stakeholders can read them, and they all get the information that they want. That can either be in the statutory reporting format, or it could be in the more narrative reporting format. That might be one of some more traditional CSR, sustainability or corporate social responsibility type report, or it could be the GRI, so the voluntary sort of reporting that you can do. Any of those options are good options, but what it means is that all of your stakeholders get the same information. Nothing is tailored directly to them. Equally, a general sort of certification could be some kind of a rating that you might want to do, or a stamp of approval from a body, a B Corp or an EcoVadis or someone like that. So that's not directed at any particular stakeholder, but it gives everyone the same ability to read information. The other thing you can start thinking about, though, is specific reports. And that's really what I encourage everyone to start thinking about. If a stakeholder has told you the things that is important to them, it would be good for you to be able to respond to them and say what you've done for them. Now, if it's all covered within the general report, that's fine. It doesn't necessarily need to be repeated. But there are many times where you do need to have a slice of that information, just to target the few things that they're interested in and that they've prioritized, because it helps with that engagement. And that might be specific issues that they're dealing with, like a factory, or might have waste issues, so their local community is actually more interested in what they're doing on the ground in that particular location than all of the metrics that you're publishing elsewhere. So you can do specific stakeholder reports. Equally, it might be specific topics. They might be, a stakeholder might have no interest in the environment because they don't work in that world, but they might be very interested in social. They might want to know about your human rights record, or your child labour, or your diversity. So you can start slicing that information down in lots of different ways. Again, contractual compliance. If a key customer of yours says they need certain things, at the moment, you may well be asked for that information manually. But if you know that that's the information that they're going to ask for, you can produce a report which says, clause 10 through 13 are the requirements you've given me. Here's our answer to those, and then you can actually show contractual compliance without the need for them to audit you or any other sort of method to do that. And I think that's something that's going to grow, is people actually looking at the contracts more than just boilerplate legal, and actually still starting to actually be the engagement on areas like sustainability. And lastly, management reporting. All this information that you've gathered for the purpose of statutory reporting, you can also publish for management reporting. It's obviously a different nuance. It's much more tailored to value internally. But again, there's no point having a system or a process which is tailored entirely to one type of reporting. What we would encourage is people are focusing on, get the information that you need, but then have the ability to publish it in many different ways. And what you need to be able to do that, you need to know what the stakeholders are interested in, obviously, with that engagement, but documented that engagement in a way that you can actually use. You need to know what data that you've gathered relates to those stakeholder requirements. So you need to be able to do a mapping between a stakeholder and the information that's important to that stakeholder. And you need some kind of a system which allows you to write that information once, or technically once. It might be updated over the years. But once it's live, you have a common source of truth, and that then can be published out into many other formats to allow your stakeholders to get the information they need in the format they need it in, at the times and the points in time that they need it in. So that's really what I wanted to go through. I know I'm probably running short of time. Final thoughts, if you want to take away from this, think broadly about stakeholders. So stakeholders are a far wider range of people and communities than you maybe think about in the financial world. Statutory reports are only one method of reporting. Obviously, the ESRS is a very broad range of information. So it is very good, and it can be used as a very general purpose stakeholder report, because it will cover most things that are material. But it doesn't provide specific information in the way that a stakeholder might want to receive it. And again, with all the stakeholder reporting, make sure that all stakeholders are considered in the way that they receive that information. And lastly, like I've said on pretty much every one of these, reporting is not the objective of a sustainability program. It's just one aspect. It's part of the design of the program to make sure you can report out in the ways you want to report, but it's certainly not the purpose of the program. Okay, so thank you all for your time. I see there's a few questions here. Got a question. Do we have something specific we can example for social and governance reporting? In terms of how to do it, obviously, if you're in the European context, the ESRS has a number of disclosure requirements for social and governance. Obviously, if you're not under the ESRS, if you're looking at the ISSB or the more environmental side, and you need a standard to report out your social and governance, the two main options would either be to follow the ESRS or GRI, which is what people have been using for many years on the social and governance reporting. Okay, unfortunately, I think we're a bit out of time. Please send me emails if you think of questions afterwards. Thank you all for attending, and I'll speak to you all later. Bye.